walk you through what the markets did yesterday. And then, of course, we'll talk about what the global handover has been, while the US futures definitely hinting at some sort of stability. And stable was our market yesterday as well, barring that little bit of a chop and churn which transpired in the first half of yesterday's session. We finally managed to pick it up in the green, almost about 91 odd points at the high point of the day for the Nifty futures, and then eased off a little bit from there. It was a lot of unusual names which actually led the markets higher. What with the move coming in on ONGC post that brokerage upgrade, you had a couple of these insurance plays as well hold out very smartly. You had a Tata Motors make a comeback, and BEL, the darling of the market, that as well held out very, very smartly in trade. Of course, from within the broader markets, it was all about some of the capital market plays and, of course, pharmaceutical individuals like a Biocon, which held out. But to the US futures then, and some sort of stability after that sharp sell-off. Remember, the Dow fell over 170 points. The Nasdaq lost about 2% after the ISM data, and that clearly sort of, jolted the markets. The 10-year yield, that continues to be hovering around that 8-month high. So in that sense, in terms of a macro parameter, nothing much changes for us. And the dollar index, that's seen a little bit of a recovery from that 2-day of a decline that it was sitting on. So pretty much the same sentiment out there. For us, of course, it's going to be all about, I guess, the local cues, which is earnings.
So earnings are still a distance away, Aisha, but today you'll have to again say that, okay, I'm going to pinpoint some factors in the global market, and for me, I think it's the dollar index. And thankfully, the dollar index is at 108, not going above 109, and certainly there is no evidence that it wants to go past 110. Now, for me, if I'm looking at the market right now, first you have to look at the setup. The setup is that globally money is moving back to US dollar denominated assets. Money has started moving out of China, and if that is the construct of the market, then the dollar or the dollar level would be a very pivotal point in the way how the sentiment or the near-term market would move. So now sometimes bad news is good news, which is Nasdaq last night has corrected. Dollar is at 108, below 109. So you would say that are we in that top, or are we nearing what really could be called as a point of stiff resistance for US tech stocks and the dollar index? That in a sense is an important cue to gauge the market mood in terms of what the setup for the emerging markets could be. So that's point one. While the green on the screen may be missing, but clearly India is underperforming the global market, and this time around a fall in US tech stocks and a decline in dollar could be the turning point for you. We'll talk about Indian markets right now, but for me, the two talking points which everybody should consider if you're making a day trade is that the dollar is showing signs of topping, and Nasdaq, especially Nvidia, which is like the darling of the market, that is showing classic signs of converging.
All right, but Nikunj, if we talk about back home, then yes, indeed, yesterday has been a decent day. But if we look at the kind of move that we have seen in the IT index, that was seen to be taking a backseat. But other than that, Nikunj, one of the key macro data that did appear was the projections for FY25. That was the first advanced GDP estimate that we had, and India is seen to be in for a more slower growth in the times ahead, and that's very near to that COVID times as well. So how to connect the dots, and what is the view on the Indian markets?
So let's start with the technical setup, and the technical setup is that you are finding resistance at higher levels, you're finding support at lower level. So if I have to draw a line in the sand, it is not that everything is falling apart, and the intensity of selling is not very brutal, because you're falling one day, you're stabilizing, you're regaining some lost ground. So I don't think you can say that the bulls are back to the pavilion. Okay, it's not been a great smooth start for this financial year, but you are getting evidence that at lower level this market certainly is finding some taker. Till the time the FI flows are negative, the upside gets capped. Till the time the DI flows are strong, the downside gets limited and restricted. The froth in the market, which is FNO, trading activity, FNO, weekly expiry, all that hullabaloo which had happened in the market, I think that is clearly behind us. So excitement and euphoria is not there. The momentum on either sides, on the upside or on the downside, I think is not very pronounced. We are getting not very powerful moves, but we are definitely not getting very encouraging moves also on the long side. Now, let's look at the GDP data which came out. It is yesterday's story, not tomorrow's trend. They say in the market, focus on where the puck will move. So markets know that the GDP data or the growth has significantly slowed down. And that, I think, will be the biggest test of the market temperament this earnings season, simply because the view that the government spending will increase is something which is a consensus view. The view that the quarter gone by, we may see a bottoming out of earnings, that seems to be a general view. So in this earnings season, I think would be a test in terms of the direction of the economy. Have we managed to regain whatever we lost, or this is going to be a topsy-turvy kind of an quarter? And that will be a case of earnings rather than judgment. Look for fine data before you make a view. But the market setup, if I have to understand, I think is simple. Upside because of FI selling is limited. Downside because of DI buying, I think is restricted.
And I guess that is the question on everyone's mind, considering there's so many triggers now to work with, that what next for India markets?
So Aisha, there are two sizable things which could happen, both locally and globally. When will the Trump rally peak out, and when will the pre-budget rally start? These are the two factors which in a sense will decide how markets would move. Now the Trump rally, which is that, welcome Donald Trump back, cannot be an endless rally. And the pre-budget rally has to kick in, given that this time around the setting on the table is that the government will have to do something special to ensure that we are out of the woods. So it is the hello, welcome back Trump rally, which in a sense everybody is pondering over, and that is the.
If you like this video, then like, share and subscribe to ET Now.